Welcome to the Money Metals Midweek Memo, news and commentary relating to sound money, the precious metals markets, and the economy. I'm your host, Mike Maharrey. Thanks for tuning in. So just a friendly little reminder for y'all, make sure you set back your scales 15 pounds tonight so you'll be ready for Thanksgiving. Love Thanksgiving. One of my favorite holidays. In fact, it irks me that Thanksgiving has been completely run over by Christmas. I mean, we were seeing Black Friday ads weeks ago. It's kind of crazy. I love Thanksgiving, so don't railroad Thanksgiving into a corner. You know what I'm thankful for? I mean, this is time for thankfulness, right? And in all seriousness, I am very thankful that I live in a country that retains at least some semblance of a free market. I mean, yeah, I know government people are doing their darndest to destroy that free market with endless economic interventions, but it's certainly better than a lot of places. And yeah, I know a capitalist system has its share of problems, but it's far better than the socialism where central planners try to control everything. And, you know, I'll be honest, I hate to even use the word capitalism or capitalist because it is so maligned today. And I think that's because most people don't really understand what capitalism is. They conflate capitalism with corporatism. And that's kind of this marriage between government and corporations. Or another word that I think well describes the system we live under today is crony capitalism. Right? Capitalism itself simply means that the means of production are privately held as opposed to being controlled by the government. It's as simple as that. Capitalism is an economic system. It's not really a political system. So people have hung all of this political baggage on the economics of capitalism, and they've given us this bastardization, which I will grant you is not a good thing. But it's not free market. And I'm convinced that so many of the problems, I'm using air quotes, with capitalism really are problems with all of the socialism that's been interjected into our system. So, you know, we have this system today that's kind of capitalist, but there's all kinds of government controls and government interventions. And, you know, political interests are tipping the playing field in favor of their cronies, their favored corporations or individuals, institutions. So it's capitalist-ish. But it's not really free market. I'm a free market guy all the way. So I don't know. That doesn't really have much to do with the discussion today. But since we're talking about capitalism and socialism, I thought I would throw that in because somebody will listen to this and say, oh, capitalism is awful and look at what we've got. Well, again, a lot of what we've got is not really due to capitalism. It's due to this bastardization of capitalism. And that aside, I mean, even as it stands today, there is enough capitalism, there's enough free market in our system that I much prefer it than living under a truly socialist system. And you want to know why? Because socialism is always a disaster. Always has been, always will be. I mean, the Pilgrims learned this lesson the hard way back in the 1600s. And with that in mind, I'm actually going to share a little Thanksgiving history today that you may not have been aware of. I'm almost certain that you weren't taught this in your government schooling. And the reality is, because the Pilgrims started their new life in America experimenting with socialism, there almost wasn't a Thanksgiving at all. But before I get into that, I should mention the recent volatility that we've seen in the gold and silver markets. It's been a wild ride for a lot of folks over the last few weeks. And if you're quick on the trigger to buy or sell, then you may have made yourself crazy watching the prices of gold and silver over this last couple of weeks. Of course, we saw a big sell-off after Trump won, and it was clear that he was going to take that victory. We had the safe haven trade before the election that unwound. And then we actually had a pretty healthy rally last week as people started to realize that, the fundamentals haven't changed all that much. The economy isn't really all that great. There's still all this debt. There's still inflation. But then we had another big sell-off on Monday as reports that Israel and Hamas may be close to a ceasefire agreement. And that really upped investors' risk appetite. We saw kind of another safe haven bid unwind. And then we've also got some tariff concerns out there, and that has introduced some dollar strength into the system. Tariffs are perceived to be good for the dollar because you'll need a strong dollar given that shift in trade relations. And so anytime you get a strong dollar, that's going to create headwinds for precious metals. And then there's also, I think, growing sentiment that the Federal Reserve is not going to ease off interest rates as quickly as many people anticipated. You're starting to get hints from Fed officials that, this is going to be a little slower. We got, I think today, as I'm recording this on Tuesday, I think we got the minutes from the last Fed meeting, and it was clear that, we expect to ease monetary policy, but we're in no hurry to do it. Now, I say that with the caveat that I think the fact that interest rates are even as high as they are now still is going to break something in the economy. I've been saying this for months. I still think it's true. I told a friend of mine the other day, I think, 12 to 18 months, we are going to have these the chickens come home to roost, so to speak, when it comes to the monetary malfeasance. And, the monetary malfeasance goes all the way back to 2008 and before 2008, right? Monetary malfeasance set up 2008, and then they doubled down and they did quantitative easing and they slashed rates to zero and they kept them there for almost a decade. And you had all this easy money pouring into the system, all of this inflation. And then, they kind of tried half-heartedly to normalize in 2018, but that didn't work. It almost tanked the economy. And then we had the pandemic, and that really, they doubled down on the monetary malfeasance. And then, of course, eventually, as it was bound to do, price inflation reared its ugly head. You had all of this monetary inflation over all of that period of time, and it began to manifest in prices. And so the Fed had to raise interest rates in order to do the inflation fight. The problem is, they broke the economy. They broke it with the artificially low rates for all of those years. They broke it with easy money. They addicted the economy to easy money, and then they tried to take it away. And we're going to see the results of that. So the Fed can talk all they want about, we're going to lay off and slow a little bit slower, or we're going to cut interest rates a little bit slower than we had originally planned. No, they're not going to. They know that they've got to get rates down because the economy is loaded up with debt and things are broken in the economy. So, that's kind of where we are with the gold and silver prices. Again, whenever we see the thinking that the Fed's not going to ease, interest rates are going to stay higher for longer, again, headwinds for gold because gold is not a yielding asset. Now, it's interesting because I talked about this a few weeks ago. We've seen Treasury yields increasing, interest rates going up on the longer end of the Treasury curve for quite a while, and that's despite the rate cuts. And even so, we've still seen gold at these record levels. So, you just kind of have to tune out the day-to-day, tune out the noise, and look at the big picture. Shut out the noise. Think about the fundamentals. I think we're going to see more big swings in the coming weeks as investors try to wrap their heads around what lies ahead in the new administration. But again, keep your eye on the fundamentals. Yes, we're going to have a new presidential administration. Some of Trump's policies will undoubtedly impact the economy, but there are some fundamental things that aren't going to change, right? Namely, inflation isn't going anywhere. I just hinted at that fact. In fact, the Federal Reserve is already back to creating inflation. And I talked about this at length last week, so I'm not going to beat that dead horse. But that's something you should always keep front of mind. And if you didn't listen to last week's show, I explained some of these fundamental things that I don't think Trump has a whole lot of control over, no matter what he wants to do. So make sure you check that out. But I just don't see this administration being able to, it can't do anything about inflation. That's in the Fed's court. And I don't really think it can tackle the debt problem. I mean, don't get me wrong. I love the rhetoric coming out of Dodge. You got Elon in there. They're talking about Ron Paul having input, and there's this commitment to cutting government. That's great if they can do it. But as I mentioned last week, discretionary spending that they can actually cut makes up less than a third of the federal budget. And the rest of it's entitlements that politically very difficult to cut in those areas. And even, if the will is there from Dodge and from Trump and from the administration, you've still got to get Congress to cooperate to help cut spending. So I'm just not optimistic about it. What I'm getting down to is this doesn't seem like the ideal time to be unloading your gold and silver, unless you're just trying to play those swings. And, that's a whole nother ball of wax. But if you're investing to preserve your wealth and to grow your wealth over time, probably want to hold on to your gold and silver and maybe take some of these dips as a buying opportunity. While we're on the subject of investing, we've also seen a pretty healthy correction in Bitcoin the last few days after it approached $100,000 a Bitcoin. Now, this isn't surprising, right? Bitcoin is known for its rapid price gains, but also for a history of quick and significant sell-offs. And I wanted to just take a moment to point out a possible strategy for you Bitcoin investors who are out there. You might consider converting your Bitcoin to gold or silver when we hit the correction period, and this will help protect your gains from both the sell-off and from the relentless devaluation of the dollar. Now, as I say this, please don't get me wrong. I'm not poo-pooing Bitcoin. I'm not one of these, you should only buy gold and silver, never buy Bitcoin people. I love Bitcoin. I love the fact that we have yet another alternative to fiat dollars. But that said, it's not unfair to point out that it has a history of extreme volatility, right? I remember the first big run when it approached $20,000, and then boom, it was $3,200 again. The trajectory is upward over time, but it heads that way like a roller coaster, up and down, up and down. And it's also important to understand that even though some people call Bitcoin digital gold, gold and Bitcoin aren't the same. I think that's really important because I think a lot of people have created this kind of either or, where you're going to be Bitcoin, you're going to be gold. I don't see it as an either or situation because they're different assets. They have different characteristics. I've already alluded to the fact that Bitcoin is a lot more volatile than gold, but that's not the only difference. Bitcoin tends to behave more like a risk asset, and it correlates more closely with tech stocks. For instance, Bitcoin failed as a safe haven hedge as the markets tanked back in 2018. And that was when the Fed made the half-hearted attempt to normalize monetary policy. Instead, it actually correlated more closely with other risk assets. The cryptocurrency's performance was down on par with tech stocks. It actually fell about 55% in the fourth quarter of 2018, along with the stock market. And again, this was in reaction to the Fed trying to bump up interest rates and normalize monetary policy. And if you remember back then, the Fed quickly abandoned that. They were actually back to rate cuts and quantitative easing in 2019, even before the pandemic. But anyway, that same period where Bitcoin was falling, gold was up significantly. And Bloomberg actually noted, quote, the average long-term correlation between gold and Bitcoin has been close to zero, which makes both together additive to multi-asset portfolios. So in other words, Bitcoin and gold aren't an either or relationship, as I just said. It's more like, why not both? Now, I'm sure that if you're a Bitcoin investor or if you've dabbled in it at all, you know the anxiety that can be caused by protracted sell-offs and, big dips. And one way to mitigate this is to sell Bitcoin as it goes into a bearish period and then buy again at the bottom. Now, of course, that takes timing and study, and you have to have an intuitive sense or some technical analysis that helps you know when to get in and out. But, it's still not a bad idea to kind of ride the highs, then sell, let the dip happen, and then buy back in at the bottom, and then you're multiplying your gains. But here's the problem with that. Holding your profits in dollars exposes them to the relentless inflationary pressure that you've constantly got on the greenback. So to avoid this, a savvy investor can use Bitcoin to buy gold and also silver, hold the precious metals through a Bitcoin bear market, and this will preserve profits and possibly chart you additional gains. And then when the market begins to recover in Bitcoin, the investor can sell the precious metals and re-enter the Bitcoin market. Fun fact, Money Metals was one of the first bullion dealers to actually accept Bitcoin as payment back in 2013. And since then, the company has expanded its services. It facilitates both buying and selling transactions in cryptocurrencies, not just Bitcoin, most of your major cryptos, using the BitPay platform. So if you have cryptocurrency, you can convert those to precious metals. And if you want to sell precious metals, you can convert them right back directly to crypto without having to use the dollar as an intermediary. Money Metals Exchange can even make payments to clients using a variety of cryptocurrencies. We can purchase your metal and send you the digital coin of your choice as payment. And this transaction can be done directly on our website or over the phone. You can also swap Bitcoin and other crypto coins for gold and silver and store your precious metals at our depository, which is bigger than Fort Knox. It's pretty cool. Brand new depository, all the state-of-the-art security and auditing in place. And storing with us makes it quicker to move back into crypto when the time comes and avoid the costs and hassle associated with shipping metals. So, enough of that. Let's talk about Thanksgiving. Now, I can almost guarantee you did not learn the story that I'm about to tell you in school, at least not if you went to government school. Instead, they taught you that the Pilgrims wore funny hats and ate turkey with the Indians. And this story I'm going to tell is a little bit more meaty, pun intended, and it is absolutely true. And it's primarily gleaned from William Bradford's journals. So this isn't speculation. This is from source documents. And it's a story about human nature and economics. And really, those are two things that are intimately intertwined, right? In fact, economics is simply the analysis of human action. And, I think modern economics has gotten so math-oriented that it almost leaves human action out of the equation. You can't quantify human action. Like, I'm not saying that math and data aren't useful, but you still fundamentally have to have some type of human action framework within which to put data. And if you don't, that data will take you in bad directions, which is exactly what happens with the Keynesian economist. When you fail to account for the realities of human nature, you're just going to get economics wrong because you're going to assume people will take actions that they don't actually take in real life. It seems, especially again with the Keynesians and the kind of the government economists, it seems to be the creator of wishful thinking in a lot of cases. And, this is the fundamental problem with socialism. It ignores human nature and the limits on people's ability to gather and parse out information. I've talked before on the show about the knowledge problem. It's the simple fact that no human being, or even a group of human beings, no matter how smart they are, no matter how great their computers might be, it's impossible for them to gather and analyze all of the information and all of the possibilities that you need to be able to analyze in order to make a sound economic decision. That's why markets are superior, because the individuals working within the market framework make those decisions for you. It doesn't require on some guy with a PhD and a political bias to make good decisions, and they don't make good decisions. That's the problem. So why is socialism so appealing? Well, it sounds good on paper. That's something we used to say a lot when I was a kid. It sounds good on paper. It just means that, it's a nice idea, but it's not going to work in real life. And socialism sounds good on paper. We're all going to own everything together, and we're all going to take care of each other, from each according to his ability to each according to his needs. It sounds so nice. And we all want to be nice, right? People are emotionally drawn to socialism because it sounds good. It sounds fair. It sounds nice. But do you know what's not nice? Corpses. Dead bodies. Not nice. And that's exactly what the Pilgrims got when they took a stab at socialism. Now, most Americans, again, don't know that the Plymouth colony was originally an experiment in socialist utopianism. And were it not for a complete 180 a couple of years in, we probably wouldn't be enjoying the bountiful feasts that many are probably planning for tomorrow. There would be no Thanksgiving because there wouldn't have been anybody left to give thanks. So when the Pilgrims arrived in Massachusetts, it was November 11th, 1620. And when they got there, they placed all of their food and provisions in a common store. You know, these folks were forward thinkers, right? They didn't even need Marx's scribblings to appeal to. They set things up on that socialist principle, from each according to his ability to each according to his need. We're going to take all of these supplies and all of this food, we're going to put it into a store, and we'll all take out of it equally. And then when we start growing food and doing work, everybody will contribute and we'll take out what we need. But as it turns out, things got off to a bad start in the New World. I mean, in the first place, conditions were absolutely miserable because, it's wintertime in the Northeast. And William Bradford described it, and he said, the most sad and lamentable part was that in 2 or 3 months' time, half of the company died. And he wrote, especially in January and February, being the depth of winter, and wanting houses and other comforts, being infected with the scurvy and other diseases, so there died sometimes 2 or 3 of a day. In the aforesaid time, that of 100 and odd persons, scarce 50 remained. Now, to be fair, the Pilgrims' initial struggle didn't really have anything to do with socialism. They just had the misfortune of landing in Massachusetts at the onset of winter. And if you live in New England, you understand their pain. But even after their first summer, things didn't improve much. The following fall, the Pilgrims harvested their crops, and again, they all went into a common store. Now, that was nice, right? No greed, nobody getting any more than they should, no rich billionaire exploiting resources. Of course, nobody was getting much of anything at all, but still, they had to feel good about themselves, right? Because after all, the system was fair. So in November, a year later, the ship Fortune arrived at the colony with more than 30 new settlers, most of them young men. Now, more manpower was welcome, but according to accounts, they brought, quote, not so much as a biscuit cake with them. So for some reason, they came across the ocean into the New World without any extra food. So now they had a meager supply of food in the common store because they didn't produce a whole lot. And they had even more mouths to feed. The future looked pretty bleak as food supplies ran out and the planned socialist community faced starvation through yet another winter. Now, the following year, the harvest was again poor in spite of the added manpower. Nevertheless, the Pilgrims still hadn't learned their lesson. They put their meager harvest in the common store because it's going to work this time. Except it didn't. That winter, they starved again. So here's the reality. The colonists were learning economics the hard way. Richard Grant wrote a fantastic book. It's called The Incredible Bread Machine. And he described the situation that the Pilgrims faced. He said, for 2 years, the Pilgrims faithfully practiced communal ownership of the means of production. And for 2 years, nearly starved to death, rationed at times to, quote, but a quarter of a pound of bread a day to each person. Governor Bradford wrote that, quote, famine must still ensue the next year also, if not some way prevented. And he described how the colonists finally decided to introduce, ta-da, private property. Now, this is what Bradford wrote. This is kind of a long passage. I'm going to read it slowly because the language is a little obtuse, but this is so telling. He wrote, and he's speaking of the colonists here, they began to think how they might raise as much corn as they could and obtain a better crop than they had done, that they might not still thus languish in misery. In 1623, after much debate of things, the governor, with the advice of the chiefest among them, gave way that they should set down every man for his own, and to trust themselves. So assigned to every family a parcel of land. This had very good success, for it made all hands very industrious, so as much more corn was planted than otherwise would have been by any means the governor or any other could use, and gave far better content. The women now went willingly into the field and took their little ones with them to set corn, which before would allege weakness and inability, whom to have compelled would have been thought great tyranny and oppression. So then, reflecting on the experience of the previous 2 years, Bradford goes on to describe the folly of communal ownership. He said, quote, "The experience that was had in this common course and condition tried sundry years, and that amongst godly and sober men may well evince the vanity of that conceit of Plato sand and other ancients, applauded by some of later times, that the taking away of property and bringing in community into a commonwealth would make them happy and flourishing, as if they were wiser than God. For this community, so far as it was found to breed much confusion and discontent, and retard much employment that would have been to their benefit and comfort. For the young men that were most able and fit to labor and service did repine that they should spend their time and strength to work for other men's wives and children without any recompense. The strong, or man of parts, had no more in division of victuals and clothes than he that was weak and not able to do a quarter the other could. This was thought injustice." Whoa! Some people resented doing all the work. They didn't work hard when they knew they weren't going to directly benefit. I'm shocked. And by shocked, I mean not surprised at all. It's human nature, and we all know it. We all resent if we're doing all the work and somebody over here is not doing as much work and they're getting the same benefit. So it breeds this attitude of, well, I'm just going to do as much as I can to get by, and we'll just deal with it because I'm not going to gain anything. Now, that's just the way it is. We can lament this fact. We can say it shouldn't be that way. We can finger point and talk about how people are greedy. We can get all holier than thou and say we wouldn't act that way. In other words, lie. But people are still going to be people. Here's the harsh truth. Good intentions and feel-good policies can't trump basic economics. You can dream of unicorns and lollipops all day, but that doesn't mean you're going to get unicorns and lollipops. You're not going to change reality. Scarcity, human behavior, incentives, these matter. The experience of the Pilgrims vividly demonstrates basic economic principles. Their good intentions could not overpower the cold, hard reality of economic principles. They never have, and they never will. So, socialism completely failed. Shared ownership completely failed. The only reason that the Pilgrims survived was because they finally woke up and said, you know what, we're going to be better off if everybody has their own property and works for themselves. So there you go, a little food for thought on this Thanksgiving holiday, even as you put a bunch of food in your bellies. Meanwhile, this week kicks off the Christmas shopping season. Friday will be Black Friday. And do you know why they call it Black Friday? Because it's an awful day, that's why. I can confirm this from experience. I actually worked part-time at Toys R Us back in the mid-1990s when I was unsuccessfully trying to make a living as a musician. And I don't know if y'all remember, those of you who are of a certain age certainly will, the Power Rangers craze. I personally witnessed and helped break up a fight between two women in a Toys R Us aisle because they were fighting over the last of that season's must-have Ranger. So, Yeah, Black Friday. It's awful. You have probably heard that they call it Black Friday because it was traditionally the busiest shopping day of the year, and sales on that day typically got retailers out of the red and into the black financially for the first time during the year. But this is pretty much just propaganda that was put out by the retail industry because they didn't want negative connotations attached to what was once one of the most important shopping days of the year. But Black Friday being that the retailers are getting into the black, that's a recent explanation for the name. The earliest known use of Black Friday predates the first time that explanation was used by about 3 decades. The term Black Friday was used in the Journal of Factory Management and Maintenance back in 1951. That's kind of the first time that they've been able to track down where the term came up. And it referred to the fact that workers called in sick the day after Thanksgiving. And at about that same time, cops in Philadelphia started using the term Black Friday and Black Saturday to describe the chaos caused by the crowds and all of the traffic congestion as the Christmas shopping season kicked off on the weekend after Thanksgiving. So you see, it really is called Black Friday because it's an awful day. I wasn't making that up. I have a tradition of not leaving my house on Black Friday, and I think it's worked out well, but I know some people love it. You know, they want to get out there and get in the shopping. I'll pass. If you're more of my mindset, I've got the solution for you. You don't have to go out and shop this year. You don't have to go out. Of course, you know that. You've got Amazon and whatnot. But here's another idea. This year, give your loved ones the gift of money. But I'm not talking about, the $5 or $10 bill your grandma used to stuff in the little envelope. No, I'm not talking about worthless paper money. I'm talking about real money. Give the gift of gold and silver, the gift of real money. So it is truly a great gift and one that will appreciate over time. It won't be left, in a pile or relegated to a garage sale in a few years. You can get beautiful gold and silver coins, collectibles, and all of this is available here at Money Metals. So this is a great time. Instead of going out and frustrating yourself in traffic on Black Friday, just call 800-800-1865, talk to a Money Metals precious metals specialist, and they can give you gift suggestions. If you're interested in investing, they can help you figure out how gold and silver will fit into your investment strategy. Fantastic folks over at Money Metals. Give them a call and talk to them. Or if you don't like talking on the phone, you can go to moneymetals.com and chat with the precious metals specialist online in an online chat. Or, if you just want to shop online or order online and never talk to a soul, you can do that as well over at moneymetals.com. So make Money Metals part of your Black Friday tradition and avoid all of the traffic and the horribleness that goes with getting out on the roads on the Friday after Thanksgiving. So that is a wrap for this episode of Money Metals Midweek Memo. You can get more information about everything that I've talked about on the show today and a lot more over at moneymetals.com/news. And if you want to get the latest news and information relating to gold and silver right in your inbox, make sure you sign up and get on our email list. Of course, you can subscribe to the Midweek Memo on your favorite podcasting platform. And when you do, you'll also get our Market Wrap podcast every Friday, where you'll get a quick overview of the week in precious metals, along with conversations between yours truly and interesting people in the world of gold, silver, economics, and investing. Thanks again for listening to the show. I always appreciate the fact that you take time to listen. I know there's plenty of other things you can go out and listen to, so it means a lot that you spend a little bit of time with me. Thank you. I hope you have a fantastic Thanksgiving, and if you happen to go out on Black Friday, well, be careful out there.